Hey, crypto enthusiasts. Welcome back to IAmCrypto, your go-to channel for everything happening in the world of digital assets. Today, we're diving into some sizzling news. Solana ETFs. Yep, you heard it right. Solana is the latest crypto asset stirring up excitement, with whispers of ETFs making their way to the US after Brazil's big move. But hold on. How likely is it that we'll see Solana ETFs trading on US soil anytime soon? Let's break it all down. First, let's take a quick stroll down memory lane. The journey of crypto ETFs started with the approval of Bitcoin and Ethereum ETFs in the US, which were major milestones. These opened up new avenues for investors, allowing them to gain exposure to crypto without having to dive into the complexities of managing digital wallets. Now, after this groundbreaking achievement, the spotlight is shifting to Solana. So, why Solana? What makes it the next big target for ETF issuers? Solana has been on quite a ride, folks. From its peak price of around $260 in 2021 to a jaw-dropping low of $8 in late 2022. Thanks to the FTX debacle, Solana has seen it all. As of today, it's bounced back to around $153. But let's be real, Solana's volatility could make a roller coaster look like a walk in the park. And that's both a blessing and a curse for investors eyeing a Solana ETF. Some say Solana's wild price swings could scare off conservative investors who prefer the relative stability of Bitcoin or Ethereum. But hey, for those with a high-risk appetite, Solana's potential rewards could be worth the ride. Now here's where things get spicy: regulation. Brazil has already taken the plunge, approving a Solana ETF, and this has set the crypto community abuzz. But let's not get ahead of ourselves. The US, despite being a financial juggernaut, is treading cautiously. The US Securities and Exchange Commission, or the SEC, has been more hesitant, particularly when it comes to cryptocurrencies like Solana that might be classified as securities. Brazil, on the other hand, is taking a more progressive approach, aiming to attract capital from outside by embracing digital assets. Their Comissão de Valores Mobiliários, CVM, is paving the way for innovation with digital sandboxes and early approvals of crypto ETFs. It's almost like Brazil is saying, "Hey world, look at us, first Bitcoin, now Solana, come invest!" Meanwhile, the SEC is like, "Whoa, slow down there." The SEC's primary goal is to safeguard the capital within the US, and they're playing the long game. So what's the verdict? Is a US Solana ETF imminent? Well, according to Marcus Thielen from 10x Research, progress is being made. Big names like VanEck and 21 Shares have already thrown their hats in the ring, submitting applications to the SEC. But don't pop the champagne just yet. The path to approval is as clear as mud. The absence of a robust Solana futures market, something that was crucial for Bitcoin and Ethereum ETFs, adds another layer of complexity. Even with the enthusiasm sparked by Brazil's approval, the timeline for a US Solana ETF remains as uncertain as the next crypto pump or dump. Heights. Matthew Siegel from VanEck nailed it when he said, "A US Solana ETF is as inevitable as the next block in the chain, but it looks like US regulation needs a soft fork before we can get there." Here's the bigger picture, folks. If and when a Solana ETF does get the green light in the US, it could be a game changer for mainstream crypto adoption. Why? Because it lowers the barrier for traditional investors to get a piece of the Solana pie. No need to mess around with exchanges or private keys. Just buy the ETF and you're in. This could bring a flood of new money into the crypto space, potentially boosting Solana's market cap and further legitimizing the asset class. But with great power comes great responsibility, or in this case, great volatility. Solana's history of sharp price movements might make some investors hesitant, preferring the tried-and-true Bitcoin for portfolio diversification. That said, the sheer potential of Solana's technology, its speed, scalability, and low transaction costs makes it an attractive option for those willing to embrace the risk. The SEC's role in all this can't be overstated. They hold the keys to the kingdom, so to speak. We often get glimpses of potential shifts in their stance through court filings or political maneuvers, but much of their decision-making process remains shrouded in mystery. Sebastian Manthan Dave, co-founder of the Ripple-backed platform Palisade, gave us some insight into this when he said, "A lot of stuff goes on at the SEC that is under the hood before we see something surface. It's like they're tinkering with the engine while the car is still running, and we're all just waiting to see what comes out of the exhaust." Dave also pointed out that the SEC is in a tough spot. They're responsible for a massive amount of capital within the US, so they have to tread carefully. They're likely watching how Brazil's market reacts to the Solana ETF approval before making any moves on their own turf. It's a classic case of you first. The SEC doesn't want to be the guinea pig here. So where does that leave us? While there's plenty of optimism about a US Solana ETF, the reality is that we're still in a waiting game. VanEck's Matthew Seigel hinted that without a major shift in policy, the timeline for approval remains murky at best. And if we're being realistic, the end of this year would be an optimistic scenario, as Dave put it. But don't let that dampen your spirits, crypto fans. The possibility of a Solana ETF in the US is very real, and the benefits it could bring to the market are substantial. It's just a matter of when, not if, we'll see it happen. That's all for today's deep dive into the world of Solana ETFs. If you enjoyed this breakdown and want more insights like this, make sure to hit that like button, subscribe, and ring the bell so you never miss an update from IAmCrypto. Stay informed, stay invested, and as always, keep riding the crypto wave. Until next time.